weekend all. Ira Epstein with your weekend edition of your financial market wrap-up for Friday, the 6th of September, 2019. And we're just after 3:15 p.m. Central Daylight Time, which means we've stopped trading momentarily, and we'll do that for 15 minutes. Then the markets will reopen at 3:30 in the stock indices, but this will be where the settlement price is. Okay, they let them trade another half hour after that. But that's where you're at. So we saw some weakness in the Russell, a little more strength, and the word is a little more strength in the NASDAQ and the S&P, the Dow getting some strength as well. The big event of the day was probably metals continuing their washout to the downside. You hear the term crowded trade. It's when everybody gets the same way. We had a crowded trade also in the bonds and the notes, and they've had a bit of a correction, and they're finishing up for the day today. Energy prices up a little bit as well. It's an interesting week. We heard that China's going to be having a meeting with the U.S. in October. They didn't give us a date yet. I still don't buy into the fact that these are other than meetings where it's better that they talk than don't talk, getting things done. And I've gone through a list of how much has to be done to get a trade deal done. No. Maybe the most you can hope for is that the president lifts the tariffs that are going to go into place October 1st, holding them back until he sees that the meeting goes the way he wants or not. That's always a possibility for the October 1st tariffs that are supposed to go on. But anything beyond that, I think you're really stretching it. In terms of where you're at on a monthly chart, now this gets interesting. You finished out today at 29.8075. The highest close on a monthly chart is 29.82 and a quarter. So for all purposes on a monthly closing chart, that's where you're at. When you go to a weekly area chart of closes, you have a lot more room to the upside. 30.2480 was the high, 30.2450 rather, was the high close. Now what this market has managed to do is it managed last week to just get over that 18-week average, and now you see that blue line, that's where the market finished up this week. All right, the correction phase of the market I think ended, and the reason is you broke that pattern of a high, then you came up to another high and a close and down. You see that? Now the question is, can you mount anything lasting? And the word is lasting to the upside. September is a pretty hard month. We'll see if the market's able to do it. When you take a look at just a bar chart, you can see how you've got your resistance up here. Remember, we were just talking that 30.24 area, back down here to 27.60, and we're getting a bounce in there. But overall, it's a big swing area. You haven't broken out one way or the other. When I put the swing line on, what the swing line does is it looks back at each week before it. If you have a higher high week, the line gets drawn one way. If you have a lower low week, it gets drawn another. The close always comes into play. Do you have an inside week? Do you have an outside week up or down? I teach this all in my charting course, and it ends up consistently forming what's called a swing line. And you're not wondering, gee, where do I put it? What you're looking for is a pattern. And on the pattern, if it's an uptrend, you're looking for higher highs and higher lows. And then you can say to yourself, well, as long as you don't come back and break through this 20, and I'll give it to you exactly, 28.10 and a quarter, this low on that basis, you're in an uptrend since you took out this week's high. If we come back here and we look at it this way, we had lower highs and higher lows. We didn't really have a trend. It set itself in place when we got over this high, and it's followed through. So we have an uptrend. We filter that with moving averages. So the averages that I like to use are the 18, the 100, and the 200-day. Now, I use a 50-day also. I take it down to 45. Some people keep it at 50, but those are the common numbers. And looking at this, when the market closes over the 18-week average, I define it as bias up. So it's like a stop-and-go sign on the swing line. You could have the swing line pointing up, but if prices are under that 18-week average, the two negate each other. That's not the case right here. I would view support back at the 29.18 level. What you don't want to see taken out is this 28.10 and a quarter zone. What about upside? Since these moving averages, 200 week, the 100 and the 18, there's none above us. I then go to the Bollinger Bands. And what a Bollinger Band is, an algorithm designed to keep the market trading within it 95% of the time. I interpret that to mean that the first time you hit it, be it on the upside or the downside, that's where pros might be coming out of the market. And why? Because 95% day chart, weekly chart, it's not going to stay over that band or under it, depending if the market's going up or down. And as you can see, it went down to it, held it, came back, has been fighting a battle. It's current tense, not past. Still hitting 1, 2, 3, 4, 5 weeks. This week, I don't think it hit it. 5 weeks in a row of hitting that number. It actually did hit it. 6 weeks in a row. So for a month and a half, this market, be it to the upside or downside, each week it comes back to that 18-week average, and it's working from there. If the market goes up from here, a potential resistance point, 30.53, new contract highs. We're not that far away from them. Take out 28.10 and a quarter, you lose the uptrend. Can you turn into a downtrend? No. You'd have a higher high, lower low, two levels of support, the 100-week and the lower Bollinger Band. Then I look at momentum, and on slow stochastics, which is the oscillator I prefer, a lot of people like MACD. There's all kinds of things they like. I like this one. It's easier. I think it's more responsive, but that's my opinion. I see it pointing up. I see higher lows, higher highs. I see potential resistance up at 30.53, support 29.18. In the NASDAQ, same pattern. You've got momentum pointing back up. You have higher lows, higher highs. You're over the 18-week average, putting into possible range 80, 89 and a half, the upper Bollinger Band. Support back at 76.48, let's call it. And what you don't want to take out is 73.53 and a quarter. In the Dow, uptrend. You have higher lows, higher highs. Now you can see you held the lower Bollinger Band when you tested it here. If I come back to the NASDAQ, held it there too, the first challenges of it. Resistance all the way up at 27, let's call it 27,569. Momentum up, bias up, trend up. In order to break the uptrend, you've got to take out this low, but right below you are a lot of support zones. In the Russell, this is the weakest. Even though the daily charts look nice on it now, it's not how the weekly chart looks. The weekly chart is still one of lower highs on this, lower lows. Today's high was 1525.50, which just got over this high of, it didn't get over, it just missed taking out that high of 1525.90, which left in place the lower highs, lower lows. Got it? Momentum trying to point up, bias down since you're under the 18-week average, and the swing line still pointing down. Take out this week's high, and I'm looking for resistance in two levels, the 18-week to the 100-week, weakest of the indices. When we look at the VIX on the weekly chart, all you've done, you've put back into it the lower highs, lower lows, right into two support areas. In green, you see that right there, it's the 100-week average and the 18. Now, if this market were to break down, I wouldn't be surprised that the lower Bollinger Band offers the support. On the way up, I'll be predicting the upper Bollinger Band offers the resistance. But what do we have here? We ended up with a close at 1,500 that is under the 18-week average. The bias is down. You even closed underneath the 100-week average. So you're keeping the bias down, lower highs, lower lows. You've gone into a downtrend at this point with the resistance right above the market. When we take a look at the 10-year notes, what we have is a market that finished off on a weekly basis with an outside week down, a key reversal down. It is the highest high that we've made, not only on this leg, but period now at this point. And you closed lower. So momentum, questions, you've got to take out today's, actually this week's, I'm used to the daily chart, this week's high to say, nah, that outside week down has no meaning. Barring that, the market's now on the defensive, even though you've got the swing line up, momentum up, bias up. Still got to keep your eye on that. In TLT, the market had gotten over, and you can see it right here, the upper Bollinger Bands. The odds of staying over a Bollinger Band, be it a weekly chart or a daily, is 5% of the time. I came up and started doing counts on weekly and daily charts on lead contracts and futures. And what I saw was it's rare. Very rare that you get beyond 5. It does happen, I've seen it, but it's really rare. More common is you can get a week to 3 weeks, 4 weeks up. And what I started doing is saying, okay, I'm going to take away one of those 5 percentage points for each consecutive week that the market is over that. So that gave me a 3% chance coming into the week after August 16th of staying over it. The market finished at 145.96, still over it. Now I've got a 2% chance of staying over it. Next week, the market's 147.28, literally right on it. I don't know what to do with that, but this week you're under it. So let's say that it went 4 weeks in a row, stalled out there. This pullback is healthy. It means that the market is still riding that upper Bollinger Band. And I realize that you're getting this reversal down, but it's not an outside week down the way that you had on the bonds. This is still healthy. Let's now assume it drops more under 143.43. Well, that would break the uptrend. That would break out the pattern. You'd no longer have the higher lows, higher highs. Sort of interesting this is all happening and coming to a head this week as the European Central Bank meets, and then after that, our FOMC meets. And if you saw today Chairman Powell's speech, he certainly sounded like somebody that's keeping the foot to the pedal, and we're getting another rate cut in September. I heard him in Zurich, and I'm sure you did, a lot of people. I'm sure there's tapes of it. Go listen to it. He's going to stay accommodative. Dollar index, upper Bollinger Band, stopping the rallies each time that it gets there. Now you finish the week off at 93.38.5, and that number was 98.95. It's almost 57 points under it. So pros, I think, paid attention, as they're paying attention when you hit lower Bollinger Bands. The question this week in the eurocurrency, will the European Central Bank have the guts to do what needs to be done, or are they going to do what they typically do, which is they take a step, but it's sort of like, we won't get ahead of the curve, we'll stay just behind it. This market on the weekly chart is still bearish. It is running the band down. Momentum is down. All the trends are down. You'd have to get over last week's high, which was an outside week down of 111.82.5 to negate the downtrend. Right now, you're just running at that Bollinger Band, 1 week under, next week over. That's pretty much what you're doing. Mexican peso. Well, there's meetings between the U.S. and Mexico, and immigration has dropped dramatically, big time, with what Mexico has done. I think they have up to 25,000 police, National Guards watching the borders now. We don't hear about that on our TV very much, but I'm hearing that big numbers dropping. You have a higher high, lower low, and you had spent, like we were talking. On this week, you finished off at 49.80, which was just under the Bollinger Band. This week you had finished off at 50.08, just under the band. And this week you finished off at 50.67, which was fighting the band and came back over it. So you had 2 weeks in a row under, and you're back over. My point is, I have discovered over the years trying to sell under a Bollinger Band or buying above it, not probably the best for financial health. I find a better way to work with that. I don't mind when a market's riding the band, and it is. It's still effectively riding it because it's hitting it each one of these weeks. It hasn't moved away from it. Resistance, 2 levels, the 18 and the 100-week average. Canadian dollar, great numbers out of Canada. If you look today at their financial stats, we have elections coming up there. Remember that. You've also got how many weeks in a row just going sideways at this 18-week average of closes. You haven't gone anywhere. You're just going back and forth. Market's not throwing out trends at this point. Japanese yen, we had this safe haven fear, if you'll remember. We were talking every week. Interest rates crashing, the race to the bottom. And people were buying this. They've stepped out of the yen as the market has become more risk-on oriented, and you see that. You stepped out of your uptrend. The Bollinger Band held this market very well. The trend, well, the overall bias stays up. Do you see that? You stayed over the 18-week. So I'd expect that even if you come down and challenge it, it's a neutral zone. Now let's assume the market throws in the towel and everything becomes risk on. Then you have the potential for down here, but you're not trending. You have a higher high, lower low. Bitcoin worked itself down from this all the way back to the line in the sand, hit it, and now the market is neutral. You have a lower low, you have a higher high, and momentum is flattened out. You're neutral on this. In the Brent versus WTI crude, we had a nice bounce off this low of 377 differential. We came up last week. We got as high as differential of 533. You've corrected it. They're narrowing a little bit right here. For the week, we're ending up with a pattern now, and I can make an argument here in looking at what I've got. I should take this arrow and have it pointing up. We should have this low with that higher lows, and with the end of the week, a higher high, momentum up, countered by the fact that you're under the 18-week average, which means bias down. You've ended the downtrend is what this chart is saying. It is not saying that you've begun an uptrend. When I come to the WTI crude, the market's fighting a battle at 56.52. It's going to look like it's going to settle right in that zone. You have an outside week up. If you settle over it, you can argue here that you got higher lows, higher highs. That would be friendly. What you don't want to see taken out over the next 2 weeks, as this is a weekly chart, is this week's low. So it gives the bulls an idea of where to throw in a towel, in my opinion. Resistance, you got 3 levels of it. Obviously, you're fighting right here, but then the 60.98 to 62.27 are the zones to fight the next battle. Gasoline is bearish. Lower highs, lower lows, maybe ahead of itself with this break that got under the lower Bollinger Band intra-week, but then you came right back and you closed over it. Still a bearish chart. Nothing here has turned that corner. And you did neutralize heating oil. You actually came out of a downtrend of lower highs, lower lows. You had one shot to cover at the lower Bollinger Band. Now, if you take out this high, which you did this week, you negate the downtrend. The settlement looks like it's going to be right around this number. It might close over it, which would give it bullishness. It would be the bias up, the trend up, momentum up. And until this is taken out, you put into play the possibility of getting to the 100-week average or the upper Bollinger Band. Keep your eye on that pivot, as I'll call it, the 18-week average of closes. So, interesting week, to say the least. Now, I cover this in much more detail for you every morning. I typically get up 4:35 in the morning, and it's like a regiment. I start reading what's going on in Asia and Europe. I'm through with that by 5:20, 5:30 at the latest, and I'm looking at what's going on in the U.S. markets overnight, anything to go on, what are the morning reports coming out. I've already written about them the night before. So now I put it together, and each morning I start you off with a lot of trade ideas. I'm going to cover 40 charts on the futures and 5 typically on the ETF market. The charts are going to look this way rather than me standing in them. They're just going to be of the chart. I'll have my headset on, and it's like you're sitting next to me. I'm saying, here's what I'm seeing on this chart. And just think of it that way. That's how your morning's going to begin. We're basically, in this video, think of it that way. I'm going to give you a technical analysis. Before I tell you what I'm seeing on the chart, I'm going to say, are there any fundamentals we should be worried about? Any big reports? We'll talk about that. Then, assuming that that doesn't stop us, should we be looking at a point of entry together, an exit point? Were we right? Were we wrong? What's a stop order? And where could this market go? Maybe it has a couple of stages to go, as we see. So I'm looking at all that. It is not for big position trading. It is swing trading. It can last a couple of days as the concept of it. And I cover in the same sequence all the time, the charts, in this exact order. You're able to grab the bottom of the video slider and move it. It'll flash up and it's going to say stock indices, foreign currencies, interest rates, whatever section you want. The idea there is time. I want to save you time. If you want to watch the whole video, you're welcome to do it. On the other hand, you might just have a focus on a certain area that you want to know about. It's going to be right there in a time element and a slot just the way you'd expect it would be, and away you go on it each time. There's also a lexicon on the side here where you, instead of sliding a slide bar, you can just click it. It'll take you right to that section. So as I'm recording this in the morning, I come back to a small amount of editing to make sure all these slots fit in, and away you go. My goal is to have this video out between 6:30 and 7 a.m. Central Daylight Time every morning, Monday through Friday, not including holidays. I take the holiday off. So you get typically 5 a week. the cost for it, because there is a cost. I'm getting up that early, I'm going to be paid for it. 26.5 cents a day. You're not overpaying me, but I get a lot of people doing this. You can't find it on the YouTube. You're not going to find it on other websites. But I throw into this a $40 value each month because you're able to get our handheld applications that have all our news in it. If you subscribe to any of my services, whatever you subscribe to is going to be in that as well. So when it comes out, instead of you worrying, did you get an email? And you'll get an email from me telling you it did come out, but on your phone, you get a push notification and it'll tell you it's ready. Just click on it. It's going to open up everything you need and you're watching right away on that. Pretty interesting. Obviously, you can also watch on your bigger screen at your computers. If you want to continue after that first 30 days, you're invited to. You don't have to. It'd be $15 every 30. If you want to buy a 1-year subscription up front, I take it down to $13 for every 30 days, but you pay it up front. It's $156. It's what keeps this show going if you want it to keep going. Go to our website. Under either research or education, you're going to see Ira's morning subscriber video. Click on it. You might want to read about our other parts as well. And you can always click up here. It'll take you right there. Sorry for being so long, but there's so much this week to talk about. Talk to you on Monday.